Two Bowls in a China Shop is brought to you by these great companies that are giving us money to let you listen to their stuff.
Bullshit, Kyle. We make this show. You and me. Two Bulls in a China Shop is brought to you by us.
Someone's got to pay the bills, Dan, because it's not our trading.
All right, roll them.
Progressive presents Forced Metaphors about bundling your home and auto.
When you bundle your home and auto with Progressive, you get great savings and round-the-clock protection, which is as beautiful as looking your firstborn child in the eyes for the first time. Well, that's a bit much. Maybe it's more like looking your second-born child in the eyes for like the third or fourth time. Point being, the savings and round-the-clock protection are really, really magical.
Forced Metaphors, presented by Progressive. Bundle and protect today. Progressive Casualty Insurance Company and Affiliates. Discount not available in all states or situations.
You are listening to an entertainment program put together by a company called Financial Ineptitude. Anything said on this show is not an endorsement or professional advice. Would you really want to tell a court of law you were suing us because you thought taking financial advice from two idiots on a podcast put out by Financial Ineptitude was a good idea? Really? Clown hat smiley face.
Well, hello and welcome, everyone. Welcome back to the China Shop. If it's your first time here, just plain old welcome. Get on inside. I'm Shopkeeper Dan. With me today is Jason, host of Completely Off the Rails podcast. How are you doing today, Jason?
I'm doing great now that the market is closed and I've stopped losing money.
It feels like a typical Friday in my house. Kyle is on vacation. He went up to Jackson Hole to see the Fed Powell speak live. You know, he's just such a Powell junkie. Can't get enough.
Aren't we all?
Yeah, we love it. Come on in the shop with us today, folks. Sit back, relax, hedge against the rage machine. We'd like to welcome any new listeners just joining us. We're here smashing our way through a complete set of fine china, sharing those ever-growing strategies for maximizing gains and cutting losses. If you are new to the shop and stock trading in general, we recommend you go ahead and pause the show and check out one of our many beginning trading episodes, or maybe our knowledge and resource centers on financialineptitude.com. We'll have all those links in the episode description, but the best place to be is just head on over to our Discord server. We get on there every day. It's just filled with amazing people. It's just an awesome place to be. It's totally free, no paid tiers or special access areas. And when you do join that server, go ahead and slide into Kyle's DMs with your mailing address, and we'll send you some smash it yourself swag straight from the shop. We're just so glad everybody's here. It's a lot of fun. Always better with friends. Speaking of friends, Jason, you got any show news to report for us?
Yeah. He gave me August recording schedule.
No, we would need September.
Yeah.
September.
Yeah.
Okay. Let me see if I can do a Kyle impression. On September 5th, we've got James Woodall from Woodall Wealth Management. On September 6th, we're recording with Martin Sains, author, runs Bequest, a investing firm. On the 12th, we got Kevin Rendino, CEO of 180 Degree Capital. And on the 13th, we're going to talk to Eric Smolinski, a retail trader and creator of ESI Invests. Oh, that all sounds fantastic. I can hear the excitement in your breathing, Jason.
That's pretty good.
That's fine. I've been working on that one.
Yeah, good job.
Hold on, let me have some more whiskey. It might get better. Oh, we have got a loony, luck-filled, lackadaisical episode for you today. Lots of market-moving news, plenty of stocks on the radar, and more options than Russian troops shooting themselves in the leg for that big 50,000 ruble bonus. And reach out to us, folks. We do love your messages and comments on Twitter and Facebook, on our Discord. Get on there. A lot of happy, awesome people ready to chat and hang out. If you're old school, you can send us an email to twobulls@financialineptitude.com. That's the number 2. Or you can give us a phone call at 725-22-BULLS. That's 725-222-8557. Maybe you got a hot stock tip. Maybe you want to tell us about a great trade you just made. Or maybe you're trying to find a new air supply for your galactic empire, and a pesky local regent just refuses to hand over the codes that would allow you to harvest that sweet, sweet oxygen. Doesn't matter. We just love it. Would you reach out?
Password is 1234, and it will open the airlock.
God, now I got to change the combination on my luggage.
Right, yeah. A good sweet air out of the can.
Sweet air right out of the can. Oh, yeah. Hey, we did get a phone call. Somebody did call the hotline. Let me see if I pull that up here. Here we go.
Hey guys, this is Lyle in Oklahoma, a long-time listener, second-time caller. This question is actually for Random. I was curious if he could give his thoughts on what he thinks the markets are going to do next week. Thanks again, guys. Keep up the good work, and Jason, make sure you keep Dan on track. All right, bye, guys.
Oh, wow. Random's getting calls now. Random, you wanna respond to Lyle?
Well, Lyle, I can tell you with great certainty that next week the markets will make Dan and Kyle look like idiots, and will continue to make me look like a fucking genius.
Damn it. That Random.
It's solid. I don't think it's so random. I think it's
always knows the right thing to say. Wow. So did Kyle prep you with the bet results?
Oh God, no! Kyle didn't prep me with anything.
Okay.
He just said, "Hey, you want to fill in?" I was like, "Yeah, sure." And then, "Hey, I'll send you everything." And then he left. So no, I have no idea what's going on right now.
Oh, well, I didn't calculate them, so you'll have to stay tuned until next week, dear listeners, to find out whether or not we completed the month by destroying Random. I have a feeling we did. We were so far ahead, but now that I've said that out loud, probably gonna end up losing. All right, let's move on and talk about some news.
Dow drops deep on moving inflation, COVID frustration, war damnation. We're just bringing you the fucking news. You gotta recognize the game if you don't wanna lose. We're just two bulls trading information.
Yeah, we are.
Rioters raiding, insider trading, taxes are raising, bills on the hill. We got a crypto mill. No, they ain't growing weed. When the Fed speaks today, it's some shit we don't need.
Sing it, Dan.
Two bulls trading information.
What?
Two bulls trading information.
I'm inclined to agree.
Two bulls trading information.
That is accurate. Very accurate.
All right. Well, why don't you lead off, Jason? What's your big story for the day?
Well, I don't think we can not talk about student loan debt forgiveness and how that's going to be outstanding for the economy and inflation. Or will it? Or will it?
Or will it?
Yeah. So, according to Reuters, the plan that Biden announced this week is going to cost roughly $24 billion a year. Now, they were touting it as inflation saving, but some economists are concerned it's actually going to fuel inflation. I believe what we're actually looking at is not so much helping out the American people in this $10,000 off of their hundreds of thousands of dollars of student loan debt that they have, but actually building on a campaign promise that Biden set when he was running for the White House in 2020. I also don't think it's very coincidental that it's also going to help Democrats in the voting come November.
Oh, in the midterms, yeah.
Yeah.
So you think it's just a vote grab? Like, hey, we gave you some money.
Yeah, it's
Vote for
absolutely. Yeah. I mean, like personally, my wife, she's got tons of student loan debt. $10,000 won't even pay the interest that's accrued every month on it. So
right.
I don't know how that's really going to help much.
Did the article mention why specifically it's going to add to the inflation?
Oh, no, because it's strictly political, so they didn't really give any kind of real answers. The White House came back and said, well, we haven't determined the price tag on the package yet. So, we'll just leave it at that because why give numbers when you're talking about billions of dollars and helping the American people out? We don't need specifics.
Right. It and the timing of it does seem suspicious. I totally agree. Anything economically done through the White House is always has to be interpreted through that political lens. You can't help it. And it just always seems to come like right before some sort of election cycle. I came across an article talking about canceling student debt by a Columbia professor of economics. The headline from The Atlantic was actually canceling student debt will cut inflation. It's so, we got both sides. If you go out and look, we're talking, Kyle and I were talking last week, any news article these days, you can find a competing one that says the exact opposite, it seems. So welcome to the age of the internet. The nitty gritty nuts and bolts of the article, though, as Robert R. pointed out on the Discord, because I posted this story yesterday, they say the ending of forbearance is going to be the thing that cuts inflation the most. And with the announcement that they're going to cut $10,000 and forgive $10,000 per student, they also aiming to end forbearance in January. I don't know how they didn't explain how it would cut inflation, but that is expected to, as soon as get people paying on their student loans again, might have some sort of positive effect.
Yeah, because we won't be putting more money into retailers and helping the economy grow that way. We'll be making sure we pay off loans that were too big anyway. Now that you're talking about that, there was an interesting part in the article that I read that talked about how American university tuition fees are substantially higher than in most other rich countries. Yeah, substantially by a lot of other rich countries don't pay for their education.
Yeah.
So they never get into debt. So why don't we focus on that, of how much percentage the tuition has gone up over the years instead of worrying about how much student loan debt.
Yeah. I was thinking about it myself this morning, and I made myself chuckle thinking, like, I guess I could reframe this headline as government gives up trying to collect money it loaned to teenagers with no jobs or skills.
That's perfect.
But if you think about it like that, it makes a little more sense.
Yeah, give it to the American people the way we can understand it,
Right. Fuck it. We're never going to get this money back. Just fucking stop trying.
Right. Yeah. For all you parents out there that gave your 16-year-old kid $500, you're never seeing that shit again. Yeah. It's the same thing, just on a larger scale.
Yeah, right. We've just been doing it en masse.
Right. Exactly.
We'd be remiss if we talked about the news and we didn't talk about what went down at Jackson Hole this week. Yes, that's right. The infamous Fed Jackson Hole, Jerome Powell addressing all of us that I alluded to earlier, where, we're sure Kyle is there with some popcorn and some beers, having a good time. Powell, he came out and he did not say some things that the market responded to very well. To quote the article on the Financial Times, Powell predicted there would very likely be some softening of labor market conditions and some pain for households and businesses. But a failure to restore price stability would mean far greater pain. And what he's saying is basically they are going to continue to be aggressive with rate hikes to keep inflation under control. That just because we didn't grow in inflation doesn't mean it's over, and they got to keep going strong on it.
Yeah, and what everybody heard right there was pain.
Mm-hmm. Yeah.
It's just going to be more pain. And that's it. No forward progress, just pain.
Just pain.
It's going to hurt. Like when we look at the Dow Jones down 1,000 today.
Oh, yeah.
NASDAQ 497, S&P 141.
Markets did not respond well.
Yeah. Markets don't like the word pain. Maybe we don't use it twice there, Powell.
Yeah, I was kicking myself. I actually sent a screenshot to Kyle in a DM. Yesterday, right before close, about a half hour before close, I thought, you know what? Powell's going to say something, and everybody's going to get spooked. I should just buy some puts on the SPY right now that expire tomorrow. Just maybe $3-4 out of the money. I should just do it. And I screenshotted it and I highlighted the $413 SPY put that I wanted to buy, and I think they were at like $1.15, and they closed the day over $5. It's like, this is. But I don't like to gamble anymore. I don't like to trade with my gut. But I had a something told me like he's not going to say anything people like.
Yeah, but if you would have bought it, it would have caused the Dow to go the other direction. So really, you screwed the markets up today.
I personally did it by not buying those SPY puts. Yeah,
exactly.
Yeah,
exactly.
I guess a big part of Powell's push. By the way, as an aside, last year at Jackson Hole, they were calling surging consumer prices a transitory phenomenon from supply chain issues. So maybe when he says pain, that's also bullshit. I don't know. I'm just saying last year, it's nothing but bullshit. And this harkens back to the 70s when Paul Volcker was he became Fed chair in 1979. When we had, the 70s with really a lot of turmoil and bad inflation. But I guess Volcker really choked the economy and caused a lot of pain, but it brought the economy back where it needed to be. So people watching the Fed noted that keeping at it, a phrase Powell used twice in his speech, was also the title of Paul Volcker's 2018 memoir. So we can expect a flashback to the early 80s. That's what we're doing now.
So the economy is just basically rinse and repeat. Is that what we're talking about here?
Yes.
Yeah,
Yes.
okay. All right.
Yeah.
That tracks. Yeah. All right.
So,
Cool.
you know what? As it goes down, keep buying. It'll get back up.
Right? It's going to be painful, but don't worry. It'll be worth the pain.
Don't worry. It'll be worth it. Yeah. All right. What else you got for us, Jason?
Hot dogs.
Oh, hey, I'm hungry. I'll have a hot dog.
Yeah, hot dogs. So U.S. equities, they're saying could be in for another rout once summer's over, based off of all things hot dogs. And we're not talking about the ones scarfed down at Coney Island on the 4th of July, but this is a hedge fund consisting of a basket of stocks in the S&P with the highest allocations of hedge fund dollars based on holdings of 300 major firms. Now, sounds great. All right. The trend shows that when these hot dogs underperform, the market follows, and vice versa. Here's the thing, though. Some of the companies in here are Microsoft, Google, Amazon, Tesla. So
the companies that make up the largest share, the mega caps.
Right. Yeah. So I'm not sure if this is really a good indication of market direction. Because it stands to reason if these four giants went one direction, the market's likely to follow. So analysis, more like a cold wiener than a hot dog. That's all I'm saying. Yeah.
You're right. Oh my God. Furthermore, water is wet.
Right. Exactly. Yeah.
Oh wow. Yeah, I literally have when I'm doing my day trading on the SPY ETF, I literally have a mega cap chart that I put together for TradingView, weighted as it's weighted on the SPY, because the trends and technical analysis on that definitely helps inform my day trading to a good degree. If it like you said, like it's going up, the SPY is going to follow. Like, oh look, the mega caps, they're all starting to shoot up. Well, guess I'll buy some calls on the SPY.
Exactly. Yeah.
Well, in further incredible, shocking news, Americans are borrowing at record levels to pay for their expensive cars. As inflation has gone up, obviously the cost of new cars and trucks have gone up further and further, which means people have to get bigger and bigger loans. The average new vehicle loan is now a record high $40,290 during the second quarter of this year. That puts the average monthly payment for a new vehicle loan to $667, which is incredible. To me, that's just so much for a car payment.
Yeah, and I'm sure that's over 72 months now instead of the 60 months that it used to be.
Instead of 60, right?
Yeah.
The length is just over 60 months, 69 months. Yeah. Ooh, and it's not better for used car buyers. The average used vehicle loan has jumped 18.7% to about $28,534, putting the average monthly payment at $515. So, when I look at it like that, like, oh, new car $667, used car $515. It's like, well, for $152 more a month, you can have a new car. I might go with the new car. Geez, that's not too bad.
Yeah, that's not too bad. But as I'm looking out my window right now, I'm appreciating that car that's sitting in my driveway that's paid off.
Yes. Oh, I got mine in 2016 and it's paid off. And I am so pleased. And they keep sending me letters like, hey, you want to trade that in for a new one? I'm like, fuck off, Kia. No, I do not.
For the same payment? Sure. Not a problem. I'll bring it right down.
Yeah. I haven't gotten one of those for the same payment letters in a while. Oh, yeah. Apparently, used vehicle loans are about 62% of all vehicle loans. So new cars are dropping. Like, people are buying new less and less. Crazy to me is people are still buying cars. I'm with you. Like, I'm going to be driving this new car that I bought in 2016. I'm going to be driving that till it blows up.
Exactly. Yeah, and with COVID for the last few years, we put 5,000 miles on a car instead of 15 like we normally would. So, you can shave 2 years off your car's, age right now. Who wants a new car? I did see also that the housing market, it was on fire. And then I read something where Remax is laying off like 17% of their workforce.
Ooh.
So, ouch. It was feast. Now it's famine.
That's fast. That's a fast switch too.
It is. Yeah. Very.
Whoa. Interest rates going up. The housing market does not like that. Holy shit. Wow. Was there anything talking about what's happening to the prices of homes? Are they starting to drop finally?
It didn't say, but based on the letters that I'm getting, my house is still going up. So I don't know how that's working out. People are, do you want to sell your house? No, I sure don't. Then I got to buy something at a stupid interest rate. No, I'm good.
We're not going to go, right? And then for a huge interest rate. Yeah, exactly.
Yeah. Let me get half the house for twice the price. Yeah, let me go do that. Jump right on top of that. I'm good, thanks.
Oh, my goodness. Well, you know who can help you with a home loan, though you probably don't want to refinance at the moment. But if you do, I would like to take a moment to let everybody know Two Bulls in a China Shop is proudly brought to you by Sue Pullen at Fairway Independent Mortgage and Equal Housing Lender. Sue Pullen is a certified mortgage advisor who focuses on finding the right product for you and your needs. And let me assure you right now, if you were to give Sue a call and your mortgage percentage was at like 2, and right now the rate's at like 5, she's not going to push you into a new loan. She's literally going to sit down and go over all your options and recommend what's best for you, because that's who she is. She's got over 20 years experience helping thousands of homeowners, whether it's purchasing, refinancing, or even reverse mortgages. She's going to help. She's got a license in 27 states. Reach out and see what Sue can do for you. Best way to do so, just give her a call, 520-977-7904, or send her an email. SPULLEN at fairwaymc.com. Fairway Independent Mortgage has an MLS number 2289. Sue Pullen has an MLS number 206048. That email again is spullen at fairwaymc.com, and that phone number 520-977-7904. Did Kyle send you the Trade Pro ad thing?
He did not, no.
Oh, let's see. I don't have it written down. Let me see if I do it with memory. Hey, Trade Pro, kick-ass learning to trade like a big institution. Yeah, do it. Sign up. No, the awesome guys over at Trade Pro Academy, they do wonderful training and support to walk you through everything you need to know about trading and reading stock charts and understanding what's going on in the markets to help you trade like a big institution. We've got a great relationship with them. They are fantastic in their Discord server and their academy stuff, like their workshops, just amazing. Vico and George both just love to teach, and they do it a way for everybody to understand. We do have a good discount promo code. If you join the Discord server, you'll find it there. You can sign up and get a good discount and learn everything you need to know about trading like a trade pro.
Yeah, and I will tell you that I have taken a couple of their webinars that were free, and they have made a difference for me in my trading almost immediately.
Yeah, it's legit stuff.
Yeah, oh yeah.
It's legit stuff.
It's absolutely legit. Yeah.
And speaking of all absolutely legit, the amazing guys over at Order Flow Labs, Flary and Leo and Job, very kind. They shared their toolkit with us over here in the shop for trading futures on Sierra charts, Motive Wave or Ninja Trader. And they just have some of the most amazing custom studies, stuff you can put on your charts to help you understand what's happening in real time. It's kind of like having a pro look over your shoulder and be like, hey, look at this, look at this, look at this. Buy sell zones, exhaustion absorption detectors, reconstructed tape, liquidity zones, dominator signals. It's just, they got something for everybody, constantly testing their studies and offering amazing support to understand and use their tools. So if you are trading futures, you got to check them out at orderflowlabs.com. And I also got to put in a plug for the Back to the Futures trading series that we do here at Two Bulls in a China Shop. Give those a listen. Just really amazing stuff, which, you know, longtime listeners will know once I talk about Order Flow Labs, it's time to move on and talk about some stocks.
Now it's talk about stocks time. Looking for setups, it's still not advice. Big moves, fresh news and earnings. All that we're saying, it's still not advice. Stock time.
Please don't sue us.
All right. And all right, Jason, you want to lead off with big stock news you got going on for us today?
Sure. So SoFi going out of control with the student debt thing. Don't buy it. According to Investor Place, they say there's a much better buy right now than SoFi, and that is PayPal.
Okay.
And I will tell you why. Well, Investor Place will tell you why here in a second. Basically, it comes down to price to earnings ratio.
Okay.
While PayPal has a trailing 12-month PE of 53.5, not rock bottom valuation, but it at least has one. SoFi Technologies does not. Therefore, PayPal's the better buy.
Oh, because SoFi isn't churning out positive earnings yet?
Exactly. That is the whole thing. Also, SoftBank announced some plans to sell some or all of its 9% stake in SoFi Technologies. So not a positive sign there.
Well, I mean, PayPal was 1998, SoFi was 2011 they started. So SoFi's only 11 years old, and PayPal's almost 25. So that plays into it for sure. I don't know. Looking at their stock charts, I kind of like PayPal better as well. SoFi, they had their IPO back in 2020, end of 2020. At around $10 a share, and they're currently trading at $6.18. PayPal, they had their IPO long time ago, but they've gone. They were as high as $310 almost back in 2021, middle 2021, and they're trading around 90. So I look at PayPal and say this is a big discount for a company that, like you said, making big earnings. Now currently trading at a discount, but SoFi trading at $6. It could be a good time to get in on that one too. I don't know. I guess it depends on if you think SoFi has what it takes to start making some money on their fintech, right? They loans and credit cards and stuff, but through the internet.
Yeah, and it's saying that fintech investors should look to PayPal instead of SoFi because PayPal has a more powerful upside potential. And like you were saying about PayPal, the high was at 310.16 and it closed today at 92.70. So that seems like a pretty big potential if they turn it around there. And SoFi is kind of a who knows what's going to happen.
PayPal, I don't think they're doing any dividends yet. So even though they've got positive earnings, you're not gonna be seeing those earnings paid out to you if you buy the stock. But I have to say, I myself have a PayPal line of credit that I've had for a while, and I've never done anything with SoFi, but PayPal has made it so easy for me to be like, oh, I want to buy this thing online. Yeah, that's PayPal credit. Click. I want to subscribe to this thing. I'll just put it on my PayPal credit.
I think we ordered Grubhub the other night through PayPal. So.
Right? Anything that takes PayPal, you can do their PayPal credit. But that might be through Synchrony Bank, but I don't know. I don't know if that's a different, if it's just like a corporate agreement or Synchrony's part of PayPal. I should probably look that up.
And I'm looking back at SoFi here. 28.26 was the high, and then it dropped all the way down to 482 before Biden's little plan here. The thing that looks like it turned it around, but who's to say if that'll stay in that direction?
It's tough. Technical analysis wise, I'm definitely a bigger fan of PayPal because it hits some support around the mid 70s dollar wise in June, about a month ago, and we've been going up since. But this is bear market time, so if the sell off today were to continue, we can expect PayPal to test new lows. Even though we've got we have broken structure, we've broken bear structure for the time being on PayPal, but we have not really broken. We're not in a bull structure with SoFi at all.
And I would be a little, I guess, hesitant on SoFi only because it seemed like it made its turn because of the student loan forgiveness.
Oh, yeah.
And when you see something big like that happen and it makes a turn, I don't know. That's just, is it going to stick? I don't know if it stays.
Well, and what's crazy to me is like the government can only forgive the loans that the government made. Like I've got some student loans left over that were private loans. Those aren't forgiven. I still got to pay those. I think I've got it paid down to like $4,000 left, but that's not going to be forgiven. Like I already looked it up. They were not subsidized loans, so the government can't just wave a wand and make them go away like they can with the subsidized loans. Anyway, I found a big story about Apple. Go figure, something's going on with Apple.
You don't say.
It looks like they are going to be facing an antitrust suit from the Department of Justice, and you have to get deep into the article on Politico. But the easiest way to describe it would be through a company called Tile and Apple AirTags. Are you familiar with the Apple AirTag?
I am not.
So the Apple AirTag is a thing that you like. Say you stick it on your backpack, and you can't find your backpack. You can pull up your phone, and the AirTag will give you the location of the backpack. Right? It's been in the media because people are like, using it to stalk on their lover. Like, oh, I'll hide this AirTag in their car, and I'll know where their car is, kind of thing. Well, Tile is a company that makes their own device used to find lost items, like an AirTag, right? Apple won't let a company like Tile use they won't let them like program their own app and use the device on the phone to sync with the Tile tracking device. Like even though the hardware's in the phone, Apple's like, no, that would compete with our AirTag, so you don't get to you don't get to use the hardware for that. So which Tile's like, hey, come on now, let's do our thing. That's the for me the easiest way to explain it. But it also has a lot to do with Apple has had big fights with like Fortnite and in-app purchases. They're saying any in-app purchases have to go through Apple so they get their cut. And apparently that's anti-competitive behavior, and might looks like we're going to be seeing a lawsuit from the Department of Justice, which can't be good for business over at Apple.
So how many years away are we from us being chipped like we do our dogs so we can find each other?
Oh,
That's coming?
I don't think it's too far. And I tell you right now, they're going to do it like, you got to chip your kids. What if somebody kidnaps them?
Yeah.
Right? Which, to be fair, if your child was kidnapped, you would wish they were chipped, right? Like, oh God, if I'd only put a microchip in my child, I could find them.
I guess it depends on your kid, yeah.
Fuck you, Rudy. I don't love you. Good riddance.
Both of our dogs are chipped. We've never used it, so I think it's just you keep up with them,
right?
But yeah, I could see the need for some of these kids running around. But
aren't you going to be happy your dog is chipped? Like if somebody were to steal your dog and be like, no, that's my dog. You'd be like, no, fuck you. We got it chipped. I can prove it's my dog.
They're just going to be tracking us everywhere.
I already get tracked by my iPhone. It's not like Apple's going to be like, no, feds, you can't have that data. No, they famously do. Say, fuck you, feds. But not Google.
No.
Oh, yeah. Total sidetrack. I did read a story about Google where some guy was like, pandemic over Zoom. He's like, hey, doc, my baby boy has a rash on his crotch. And the doctor's like, send me some pictures. I was like, okay. And then Google's like, you pedophile sending dirty kid dick pics. And they completely shut down his Google account. He doesn't have access to his passwords because he was doing the Google autofill. Yeah. Totally shut his digital life down. Scary shit.
Yeah, it is.
Yeah. Yeah. So, pro tip, if your doctor says to send me pictures of your child's genitalia for health reasons, don't listen. You can't afford to. It's not worth it. You get shut down. And I'm not criticizing Google because what they're doing is a pretty important thing.
Yeah, absolutely. Yeah, I mean, I agree. But I guess in a situation like that, you're not really thinking about it because it's like, hey, I'm talking to a medical professional.
The fucking doctor told you to, right?
Yeah, exactly. And hopefully that stands up in court when the feds kick his door in.
It's just these companies like Apple and Google, they have so much power over our lives, and I feel like the Department of Justice suing Apple, that's the only recourse you or I could possibly have is some sort of government agency stepping in and being like, hey, now stop pushing these consumers around, stop pushing these other businesses around. Looking at Apple's stock chart, we're doing pretty good. I mean, mid-June it was down at $130 a share, and we closed Friday at 163. So Apple's still looking hot, even if it is down on the day from the Jackson Hole fiasco. It looks like it keeps hitting resistance around 180. It got as high as 170, around 175 in the middle of August, and it's dipping down now. But still a strong pick. Still a strong pick. God, why wasn't I buying back at the COVID lows at $57 a share?
I'm sure it's one of the hot dog stocks too. So can't go wrong with the hot dog stocks, right?
It is the biggest chunk of the SPY ETF, SPY. Yeah, by far. Well, it's like a $2.5, almost $3 trillion company. The article actually brought that up. It was like, they're going to fight it. They're worth $2.73 trillion. The DOJ, Department of Justice, isn't even worth $2.5 trillion.
Yeah, they get a couple bucks to find anything they want, right?
So what other stocks are you looking at?
Relax, everybody. Peloton is fine.
Oh, good. I was worried about them.
Huge quarterly loss, 19% share tumbled, but don't worry, because CEO Barry McCarthy, he's got a plan.
Oh, good.
He is going to take care of it through layoffs, store closures, and outsourcing manufacturing.
Wonderful.
I mean, solid plan there. I mean,
that's how you grow a business.
Yeah. I mean, they're going to reduce inventory as well because, I mean, they can't sell these things. And shockingly enough, they just couldn't believe that when COVID was over, people would go back to the gym instead of staying home and just riding their bike. Who would have thought it? Who would have thought that the gym is not just about exercise, but also socializing? Wow. Yeah, he says the naysayers will look at our fourth quarter financial performance and see a melting pot of declining revenue. But then he goes on to say, but what I see is significant progress driving our comeback.
That's what you love, is the CEO talking about their comeback, right? Yeah. That's always a good sign.
Yeah, unless you're talking about the people you're laying off coming back to the job that you kicked them out of. I don't know if there's a real comeback in this story that he's got going on here.
Wow. Yeah, they also don't have a price to earnings ratio.
They do not, no.
Whoa. Yeah, I remember back at the end of 2020, they were, 160 a share?
Yeah, as high as 171.
Ooh, wow.
Yeah.
And what are they at now?
They closed at 1061. Yeah, and let's see, their low was yesterday at 822.
Wait, are they up on the day? No.
Oh, no, they're not up on the day. It's just where it happened to be the lowest yesterday as it was still going down.
Yeah, no, that doesn't look good for you, Peloton. Sorry. Oh, yeah. Oh, look at this chart. Oof.
Yeah, it's rough.
Just as, on Wednesday, they were at $13.50. That's, oh, God. That is a bit of a drop through the week.
Yeah, and I was looking at the wrong chart when I gave you the $8. I was looking at the monthly. So, but yeah, 10.12 today, when it got down there, is the lowest that it's been in weeks.
Ooh, Peloton.
Yeah. But don't worry, the layoffs will help.
Yeah. I think I saw one headline on The Verge that was Peloton CEO thinks losing $1.2 billion is a sign of substantial progress.
I don't know. When I'm looking at a stock, if I hear declining revenue, negative gross margin, and deeper operating losses, it doesn't give me a warm and fuzzy about the stock. I'm not like, yeah, let's get into that one.
That's the company for me right there. Right. That's the trifecta. Triple threat.
Unless we're going short.
Oh, exactly. There you go. That's a good opportunity, for short sellers if that's your thing. And I can't see the majority of people choosing, if making the choice going forward. Like they have a customer base, right? People that already bought them, and they're losing those customers. That's shrinking. And for people in the market to make that choice between like, oh, should I get a gym membership or buy a Peloton? Like, we're already talking about crazy inflation. Like, people don't have money right now. Like, the cost of cars are through the roof. Like, you think people are going to invest in a luxury bike or like find a gym that's $20 a month?
Yeah, because the bikes are around $1,400.
Oof.
Yeah. And I mean, let's think about why the stock went up. I mean, it went up during lockdown when people were finally like they didn't have an excuse not to exercise anymore.
Right.
They were bored. I mean, they were so bored they decided, fine, fuck it, I'm going to ride a bike.
And right. And here was a bike that can give you the illusion of connection of I'm exercising with that group class.
Exactly. So it fed off of the I'm lonely and I need to exercise, so I'll go ahead and buy this bike. And now we can go outside.
Right now you can ride a real bike and you're fine.
I'm gonna go buy a $45 Huffy and just ride through my neighborhood. I'll be good.
There you go. Well, I came across a story about T-Mobile. They're partnering with SpaceX and their satellites, which was crazy to me because I did not think that the Starlink satellites would be used for cell phone that wasn't like, something Elon Musk, like Musk phone. Get your Elo phone. But yeah, here we are. They T-Mobile, what's their stock ticker? TMUS is their stock ticker. They're trading. They're looking pretty good. They're teaming up with SpaceX. They're going to be using this not SpaceX. SpaceX Starlink satellites. They're going to be using to expand their cell coverage to all of the rural places that you can't currently get a cell phone reception.
So the middle part of America where nobody lives?
Yeah. Basically, well, I mean, look at when we look at the battle between T-Mobile and Verizon, Verizon's always been like, we got the best fucking coverage map ever. So if you can pay that Verizon premium, but I think this is a very savvy move for T-Mobile and Starlink, because it gets Starlink more out and more. It gets Starlink revenue from a place that they weren't getting it before. Like they've already been dumping satellites all over the sky. There are Starlink satellites everywhere.
Oh yeah.
And now Starlink's going to make some scratch off that. They're not publicly traded, sadly, but T-Mobile, making a big move. Looking at their stock chart, they're up off of January lows this year. They were down at around $100 a share, and now they're up at 143. They closed on Friday, 143.02. I mean, down from the high. They opened at 147, so it's down a little bit. Still, T-Mobile rocked pretty high. They don't have a dividend at the moment, but they do have a positive price to earnings ratio, so that's something. They got some earnings.
I wonder what's in it for Elon. It's got to be more than just getting into the cell phone game. There's got to be something huge.
I think for him, like, there's going to be some revenue. Like, T-Mobile doesn't get to just use their satellites for free, right?
Right.
There's a huge sunk cost in the satellites they've already put up, and there's no plans, to my knowledge, to start just giving people broadband satellite connections. I think this is the first step to doing that, and they can create some revenue and some income from T-Mobile, because they're not going to do it for free. So I currently am on T-Mobile, so like the idea that there won't be any dead zones anymore. Oof, that's a big win. It's a big win for them, because I really like that. There's definitely been times where I've been driving and it's like, fuck, my cell phone cut out.
Well, I live in Alabama, so it feels like that's everywhere for us, because we're like 30 years behind everybody else. So,
right? Look, now you can get a T-Mobile phone and boom, you're fine. Now it's not going to give like crazy internet. It's like 2 to 4 megabits per second. So it's pretty much just texting and voice. But hey, your phone, it's going to work.
That is definitely an advantage here, because we were living in the 80s. I can tell you that.
Is that going to be the new state slogan for Alabama? Welcome to the 80s.
We finally made it.
Inflation's high. Oh, you finally made it. We're still in the same spot. No difference here. Oh, wow. All right, let's. Do you have any more stocks you want to talk about?
No, that's all the fun I have for those.
Let's move on and talk about some crypto.
I got some crypto in my wallet, hanging out on my Ethereum blockchain. Yeah, I got some crypto in my wallet, some Doji, Sushi, Polka Dot, NFT, decentralized, anonymized, fabulous cryptocurrency.
All right. I have one crypto story. New Forbes analysis. Found this story on Forbes. The headline is, more than half of all Bitcoin trades are fake. Forbes did an analysis of 157 crypto exchanges, and they came up with a number of more than half of Bitcoin transactions. They're currently being faked.
All right.
Right. The U.S. Commodities Futures Trading Commission defines wash trading as entering into or purporting to enter into transactions to give the appearance that purchases and sales have been made without incurring market risk or changing the trader's market position. So Forbes is saying that most of these Bitcoin trades are just wash trades, and people would do that because they want to inflate the trading volume to give the appearance of rising popularity. So apparently it's bots executing wash trades in these tokens to increase the volume, while insiders reinforce with make bullish remarks like out on social media and stuff to try and drive up Bitcoin in a pump and dump. Wash trading also will benefit an exchange because it makes them look more credible and like they're doing more stuff. Like, oh yeah, look at all the volume we're doing on our exchange.
And there's nothing to regulate it.
There, not yet. No. Forbes said at the time of their writing, CoinMarketCap put the latest 24-hour trading of Bitcoin at 32 billion, CoinGecko at 27 billion, Nomics at 57 billion, and Masari at 5 billion. So like all these different companies are clocking different amounts. Yeah. So Forbes did a deep dive on back in March. They did the 60 best exchanges, and more recently they did a deep dive into the 150 exchanges, and they asked them 3 questions: where is Bitcoin traded, how much Bitcoin gets traded every day, and how is Bitcoin traded? And their findings were, 1, more than half of all reported trading volume is likely to be fake. They estimate the global daily Bitcoin volume was 128 billion a day. That's 51% less than the 262 billion one would get by taking the sum of self-reported volume from multiple sources. Tether, the world's largest stablecoin, is really dominant in the crypto trading economy. Its current market cap is 68 billion, despite questions about its reserves. And in terms of how much Bitcoin activity takes place at these firms, 21 crypto exchanges generate $1 billion or more in daily trading activity, while the next 33 exchanges had volume between 200 million and 999 million across all contract types. So it looks like there's like 21 main firms and then the lesser firms under. But the biggest problem regarding the fake volumes are the firms that tout big volume but operate with no regulatory oversight to make their figures credible, like Binance, Bybit, MEXC Global. There's, with no regulation, it's the wild fucking West. And they're like, we'll report whatever we want. Nobody's checking.
I don't even know what to say. I don't even know. I'm still trying to take in that over half is fake.
Yeah, right? Isn't that amazing?
Wow, that is... Get into crypto, everybody.
There's nothing shady going on at all.
We need to change those numbers to half of 50 are fake. Come on.
Oh, yeah.
Wow. That's impressive. I mean, if that doesn't scream something needs regulation, I don't know.
Yeah, and we are starting to get closer and closer to regulation. Thank goodness. But everything that comes out, and the longer crypto goes on, the more I see what I feel like is the necessity of regulation. Like, it can't just keep going like this. It can't. We're just going to see the same things that took down unregulated stock exchanges 100 years ago.
Yeah, it's one of those times when you're like, yeah, okay, government, yeah, we kind of need your help over here. You can stay at all this other stuff, but we need you to do something about this part.
Yeah. A lot of regulations didn't come about because the government was like, well, we need to feel like we're powerful. It came about because like bad shit happened and people were like, come on, we got to do something about this.
Crypto Exhibit A. Yeah.
Oh, yeah. Like the whole FDIC, like insuring banks, like that wasn't because of nothing. Right? It wasn't just like one day people were like, we should have regulations on banks. And if they follow those regulations, they get insurance. No, people did runs on banks, and banks went out of business, and it fucked up the whole economy. So we developed the FDIC insurance program. Like, banks, you got to follow these fucking rules. And if you do, we'll insure the deposits so people won't be like, my money, I got to be the first in line to withdraw or I won't get it. Like China's currently experiencing now. Anyway, there was a Korean. Sadly, I didn't hear about this until it recently ended. A Korean professor built a machine to literally, it was basically like a porta potty, like you shit in it, and it uses the feces as it's processing to like generate electricity and give you poop coins, literally pay you in poop coins for your for fueling this machine with your shits. He literally made a shit coin fueled with shit, but crazy enough, people weren't interested.
You don't say. They weren't.
Yeah, he had to shut it down. Yeah, it's a toilet that turned poop into energy and paid people with the digital currency. But he was converting it into methane gas and using the methane to generate electricity and paying people in I think what was the coin was GGOOL tokens. But it was like a literal shitcoin token. Had to shut it down. Yeah, people were not interested in a literal shitcoin.
He really should have went for marketing and branding and really focused on some other things and really sold it differently.
Right. He really should have called it the shitcoin. Like, I don't know why he called it G-Ghoul. Like, like really lean into it. That's what it is, right?
Yeah.
I want to see more marketing. Like, make a deposit now, and we'll make a deposit in your wallet. Right? Like, misread the market there. Poor
you
guy.
Can make some money. We're not shitting you. Yeah.
Exactly. Oh, the taglines are endless. Anyway, you know what it means when we get done talking about crypto, right?
No.
We do the good, the bad, and the ugly.
Oh yeah.
Yeah, that's right. Shot you dead. So you're a trader, Jason. What do you think the good parts of your trading this week was?
Well, I recently started trading options. So, and what I've been doing is setting out, okay, this is the amount that I'm going to spend on my options. And then I will day trade and make that amount. That way I know at the end of the week, the worst that's going to happen is I'll break even. And I've been doing that for the last few weeks and it's been going well. So it's not it's just kind of it's just a different thing that I'm trying and it's working out.
So you're following a risk management system.
Yeah, because if I don't lose money, I make money. I may not make any money, but I'm still not losing. So I figure if I'm not losing, I'm winning, even if it's zero.
Oh, yeah, it's so incredibly important to follow a good risk management strategy. Absolutely. I can't stress that enough. I myself, in my options trading, didn't start doing good until I hit that realization. And then part of Trade Pro presentations was like, oh wait, yeah, I should make every trade with that risk in mind. Like, how much money am I going to risk? And if I don't risk more than I can afford to lose, I'm going to be doing good.
It's working, except I guess we can shift into the bad for me because it kind of goes along with that.
All right. Let's hear it.
When I didn't do my due diligence on my SoFi option that I got this week, because, I guess I live under a rock and I didn't pay attention to the student loan forgiveness thing that was going on, and kind of went the wrong direction on it. Didn't lose. I didn't lose a ton of money. It was only like $15 worth of options, but still, the reason for me that it's bad is just it's bad practice. I know better. It's one of those things where it's like, what are you doing? You should. Options aren't a thing that you have to get in and get out real quick. You got time to look at what you're doing, so just do it, moron. It's kind of one of those things. Yeah.
Oh well, I only traded a couple days this week. I'm actually currently recording this episode from St. George, Utah, of all places, for whatever reason, personal reasons. But here I am. So I haven't been trading. Like I mentioned, I wanted to buy that put. Just betting on Powell. But Monday and Tuesday, I did get to trade, and I traded my levels right where I wanted them to be, and I made money, and I stopped at a good point. Didn't overtrade. Didn't trade off levels. That was very good, very solid. Exactly what I want to be doing. Like even if I had lost money, if I traded only my levels according to my plans and within my risk management, I consider it good. And I did all that, but I made money, so it's a doubly good. It's a good I can take to the bank. And I didn't trade beyond that this week. Only did the 2 trading days, so I didn't actually have a bad or an ugly, which is what we strive for here in the China shop. The three stages of becoming a successful trader is stage 1, you're losing money. Stage 2, you stop losing money. Stage 3, you make money. And I still consider myself kind of in the second stage of like I'm not losing money. I'm still down for the year, but I'm slowly getting back to even, and it just feels really good. Proud to be there.
Yeah, I have this. I'm still in the evolution stage. I'm not sure where I'm at, but I kind of said, all right, well, January through June was terrible, so let me just look at July 1st until now, and that's the number I'm going to shoot for and try and break even by the end of the year, and just forget the first 6 months happened,
right.
And then just focus on that because I'm still in the trying not to lose money part.
Yeah.
And this is the reason why I've got an ugly. This is the dumbassery that goes on in my life, and I don't know why I do it. Watching the pattern on Carnival, and I was like, yeah, I know what's going on. I can see it. Way too overconfident, and I got impatient, and I jumped in too early on a short position, and broke resistance, and I was like, well, based on what I've been seeing, how high can it go? High enough to make it bad, real bad.
High enough.
Because, instead of just taking the loss, I was like, nah, it's going to come back down. I know. So, I went ahead and increased my position because that's always the way to go.
Oh,
yeah. So luckily I don't, right now I'm not trading like, 100, 200, 300 shares at a time. So it wasn't a huge loss, but it's more of I lost money because I was a moron, and then it hurts my confidence because I'm like, well, maybe I didn't read the chart right. I did. I read the chart just fine. I just didn't practice risk management.
Right.
I read it just fine. I was impatient, and then I didn't get out when I should have. The two things that just do those two things, you'll be fine. But nope.
I can't tell you how many bad trades I have made with that exact same thing. Like I was impatient and I didn't fucking get out. I dug in and got stubborn because I'm right and the market's wrong. Ugh.
Yeah, because that pattern is always going to be the same pattern every single day. Yeah.
Always.
Yeah.
Yep.
So,
yeah.
If I could just get away from that, I would just have bad and good. That's the stage I'm at right now, trying to get rid of the ugly.
Oh no, it's hard, but it's so important. So important. All right. Well, should we try and make a bet against this damn random?
Sure.
I need it, wanna beat it, gonna win it if I take it from you. I'm filling my positions, quit your bitching, random's gonna lose. Got a chart full of levels and a stop that's not too tight. It's bet picking time in the shop, so pick 'em right.
All right. I pulled up my watch list on my phone. I since I am in a hotel room at the moment recording this, I don't have all my screens to pull up all my stock charts. I'm noticing that the SPY ETF aftermarket, it's down to 404. That means it's a 3.68% drop today, which is huge.
I believe Powell would call that painful.
Exactly. I think there's going to be a rubber band effect. Personally, I think Monday next week, I think we could see the bulls come out. But I wish I had my charting software up so I could see the volume profile. I don't know. Part of me wants to just go bet on the triple leveraged SPY SOXL. Well, XOXL, that's the semiconductors. That's holy shit. They're way down today. But also part of me is like, this is the last pick for random, and we're like so far ahead. Then I want to pick something safe. Decisions. Do you have any thoughts on what you would pick to trade next week to beat a random stock?
I mean, just small. Like, I don't see, I mean, I know that it dropped quite a bit because everything did, but like we talked about SoFi, I know it's not a big stock, but I just don't see it. I think the whole FOMO effect had it going up. I don't see it rebounding that much. It may come up a little bit just because of the market being down today, but
Okay.
I'd still be short on it next week.
You want to short SoFi?
Yeah.
Okay. Okay. I'm looking at their 5-day. Yeah, they're not looking good. Coming down off of 7. The volume today is pretty good. Pretty good. Filled a gap from the beginning of the week. Yeah, we can short SoFi. I like that.
Because on 8/24 the volume was 114 million, and then the next day was 53, and today it was 74. So
yeah,
and that 114 obviously is when it jumped up real high. So I don't see it. It may come back a little, but I don't see it. I think it's going to overall be down for the week. Next week.
All right, let's put a tight stop on it then. We'll say we're going to short SoFi if it's as long as it's under. I want to say if it opens with a gap down, I don't want to just short it right away. As long as it's over 6.
Yeah, no, I agree. I think it's going to Monday morning. It's going to bounce back up. I know.
Yeah,
but I think overall it's going to have a decline during the week. So yeah, it has to be over 6 for sure.
And let's put a stop. I want to do a percentage stop. Because if it depending on what it does, I don't want to put a hard dollar amount because it might move a lot pre-market, and then that stop ends up being like 20% away from where it is. So let's say 5% stop loss. Wherever it shorts, we'll do 5%. Right. Above that will be our stop loss, and then take profit at we'll say 5% and 10%.
Sounds good.
All right. Okay. I should probably write that down somewhere, but whatever. And I had the honors of finding the random stock today. It is Carrier Global Corporation, CARR, trades on the New York Stock Exchange. I think they do like heating and cooling. Yeah. They do like the mini splits and stuff. And looking at their chart, looking like we are in a bearish pattern. So yeah, take that random. They're at 40.24, coming off of a 44. Definitely structurally did break out of the bear pattern with that 44, but coming back low, we'd have to see this $40 area hold through next week. So I mean, they're currently in a bullish pattern, but overall long term, they're down. A year ago, they were like 58. So fuck you, random. We'll see what happens. All right, so we're going short SoFi, random's long car. Stay tuned. Next week, we'll have the bet results for the whole month once Kyle comes back and does the math for me, because I didn't, feel like doing that work. That's where we're at today. Thanks for sticking around to the end, folks. Thank you, Jason, for filling in for Kyle. We really appreciate having you here. I've had a really good time. I hope you've had a good time, too.
I have. Thanks for having me. Appreciate it.
Absolutely. You'll have to let us guest on Completely Off the Rails sometime. It sounds like it'd be a good time.
Yeah, I think Kyle and I are working on that. So, yeah, definitely.
Wonderful, wonderful. There you have it, folks. Come back and check us out later. We'll be back at you soon. But until then, happy trades.
Bye.
That's my Kyle impression saying goodbye.
Two Bulls in a China Shop is an entertainment program, and all thoughts and opinions expressed in the show belong to the hosts and not of any company. They are not intended to provide specific advice or recommendations for any individual or on any specific security or investment product. It is only intended to provide entertainment about stocks in the financial industry of trading. If you make trades based on what you hear in this show, you assume all risks for those trades.
Progressive presents Forced Metaphors about bundling your home and auto.
When you bundle your home and auto with Progressive, you get great savings and round-the-clock protection, which is as beautiful as looking your firstborn child in the eyes for the first time. Well, that's a bit much. Maybe it's more like looking your second-born child in the eyes for like the third or fourth time. Point being, the savings and round-the-clock protection are really, really magical.
Forced Metaphors, presented by Progressive. Bundle and protect today. Progressive Casualty Insurance Company and affiliates. Discount not available in all states or situations.